What's up, YouTube? I'm not going to waste you guys' time. We're going to get straight into the video. Like, subscribe, comment. Now, looking at the price action today on the NQ, I have reason to believe that we can see some bearish movement heading into Monday. Now, why do I say that? Looking at the 4-hour chart, we have failed to close above 17,600. We keep rejecting this level. We rejected here, we rejected here, we rejected here, we rejected here. So what is that telling me? That's telling me that bears are stepping in and they potentially want to see us retest this 17,400 level. If you paid attention to my last video, I said our key levels is 17,400 and 17,200, 17,180, give or take. If we break below 17,200, I'm going to be kind of neutral on the market. I'm not going to really pay attention. I'm not pay attention, but touch anything. And if we break below 17,000, then I have room for concern on more downside in the market. If we break below 16,800, I probably will be completely bearish. That's just I don't see that happening anytime soon, but it's very much possible, and I think we're due for a retest. Okay, so looking at the QQQ. Same thing. 423 is my key level. Okay, 423 is my key level. So far, we've held above it, but if we break below 423, there's a tight range between 423, 421.5, and then after that, I'm looking at our psych level of 420. If we break below 420 and retest and hold it, we could see a move towards this gap fill over here at around 414, 413. So keep that in mind. All right, if we just so happen to break even further down. We have a lot of gaps towards the downside. So we're looking at 407.5, 408. And then after that, looking at 405, 404. All right. So those are the levels that I'm looking at for the downside as far as the Qs. Okay. Again, overall, I am bullish on the market. I do think we are due for a dip, however. So just keep that in mind. I'm not a perma bull. I'm not a perma bear. I just go by what the market gives me. Looking at the Dow Jones. The Dow Jones actually looks better. Okay, it does look better here. So if you look at the Dow Jones, we have a triple top here. Okay, and what happened? We broke above the triple top, and right now we're kind of consolidating in this range here. Okay, so I wouldn't be surprised heading into Monday. We just continue to consolidate while tech stocks continue to maybe just drop further down or consolidate, whatever the case may be. Okay, we'll just have to see Monday. But right now, the Dow Jones does look better. We have a triple top here, 1, 2, 3. We broke above, and then if we look at the smaller time frame, what happened? We broke above. I always tell you guys about retest and mounts. Okay, we broke above 38K 100, 38K give or take. We broke above this level. We went back down to retest 38K, and then we broke back up. And right now we're just in this range here. We can consolidate, we can break back down, we can break back up. It just depends on how next week goes. All right. If we get back down under this triple top, then I will have room for concern. Why? Because we are getting rid of, if you guys look closely, we get rid of these bulls here, and then we get rid of potentially these bulls here. So there's a lot of bulls down here that we could potentially stop out of these positions, and then that leads me to believe that we further go down on the Dow Jones, just like the Nasdaq. All right. So that is my thoughts on the overall market. Again, pay attention to the 17,400 level. I think we're going to retest that level heading into Monday, if not pre-market, at market open, and then also pay attention to how the Dow Jones reacts to everything. As far as I'm concerned, the Dow Jones just looks a lot better than the Nasdaq, but we are still at the weekly SMA, 200 SMA on the Dow Jones. Okay, so things are looking shaky heading into next week. Okay, we do have a lot of news next week. We have a lot of earnings, big tech earnings. We have the Fed meeting next week. So expect next week to be pretty crazy. All right, now let's do a quick recap on stocks that I went over last video. First, we'll just go over Tesla real quick. Nothing much has changed. People are asking me, is a good time to buy a Tesla. There's really nothing much that has changed. Again, if we break below 180, look for a move to 177, and then after 177, I'm looking for a move to 167, and the lowest I'm looking at is 160. Okay. I do expect some type of retest towards 194. When that happens, I don't know. But 194 is a pivot level that I'm looking at as far as a retest back to the upside. All right. We do have a huge gap fill all the way up to about 207, 206, give or take. So if we just so happen to get that gap fill, and if Tesla breaks above 217.5, 218, I have reason to believe that Tesla is bullish again, and we can see some good signs from Tesla. All right. So that's my thoughts on Tesla. As far as the last video and the stocks that we went over, let's go over Apple first. So I think Apple is kind of playing a role in this, previous dip that we just had in the market today. I put in the Discord that if Apple breaks below 192.8, that we could see a continuation move down to 1.88. And in the last video, I showed you guys this double bottom. And what did I say about double bottoms and double tops? I said eventually we have to retest the neckline. When that happens, I don't know. All right. So eventually we will have to retest this neckline. Ideally, I would like a move down to 188 before I look at Apple calls. Right now, I'm looking at the 220 calls for February 23. Absolutely love those contracts. We'll have to see if they look the same come next week. But those are the contracts I am looking at as far as Apple goes. So I would like a move towards this neckline here, a retest here, and then before another move up on Apple. All right. So I do think Apple is playing a part in this market drop. All right. I do think we potentially see this gap fill as well. All right. At 183, 182.5. So just keep Apple on your radar. I'm not exactly in the trade. It was just something I went over and something I wanted to look out for before earnings. So just keep this on your radar. All right. Walmart. Congratulations if you paid attention to the last video and got into Walmart. All right. Walmart has absolutely looked good. I said in the last video that if we break above 163, then I think Walmart will have a move up to 165, 165.5, 165.8. All right. Those are the short term levels that I'm looking at. As far as long term levels, I'm looking at 167.5, and which is where this gap fill is, and then 170, 180 really long term. All right. So just keep your eyes on Walmart. Congratulations if you got in this trade. I still feel strongly about it. I think even given how the Dow Jones is looking, the Dow Jones still looks good for upside. Just be careful with it. But my target still remains the same with Walmart 165.5, 165.8 short term. All right. Amazon. Also, congratulations if you got into Amazon. When I went over it, we wanted to see a hold and mount above 157, 157.5. And then I said I would really like Amazon if we got above 158, and we got exactly that today. We went all the way up to 160.7, so congratulations. But my targets still remain the same. I still like Amazon up to 163, 165, 167, and 170. My long term target on Amazon will be 200. I say it all the time. Would we be surprised if Amazon sees 200? Okay. They also have earnings next week, so keep that in mind as well. All right. So those are the plays that I'm looking at. That's really all I have, guys. If you want access to my signals, alerts, stocks, Forex, crypto, we do it all. If you want access to my charts, link is in the description below. If you are having a hard time drawing out support, resistance, or you just are lazy and you just don't want to draw them out at all, you can check out the indicators below. Chart Prime has tons of indicators for beginners, gurus, whatever you want to call yourself. Really good indicators. I suggest checking it out. Link is in the description below. Other than that, that's all I have. And until the next video, guys, have a good one, traders.